This call is now being recorded.
Good morning, friends. This is my second video on the topic profits and gains from business and profession. And in the previous session, I talked about uh, the introductory part and introduction on profits and gains from business and profession under the Income Tax Act 1961. Now, today I am going to talk on the same topic, and let's carry forward our discussion. So income from business and profession. So uh, in the last class we have understood what are the expenditures which will not be allowed to be shown on the debit side of profit and loss account, and like capital expenditure, personal expenditure, so on and so forth. Okay, so and we spoke about the format for determining the profit and loss account from business and profession. So at that time, I gave you various illustration, numerical examples to understand this particular format, because this particular format is the basis on which we are going to solve the problems as far as the topic profits and gains from business and profession is concerned. So this particular format has to be remembered, has to be not only remembered, it should be understood, it should be properly analyzed. So let's look at the format, and I'm going to explain in detail the format, how the format has come into picture. So balance as per profit and loss account. So so we have here, for example, we are going to be furnished in our numerical problem trading account and profit and loss account. Profit and loss account, and we will have a net profit here on the credit side of profit and loss account, like for example 5 lakh rupees. So there may be some elements of expenses and incomes which have to be reconsidered before we finalize the net profit. So we have to make some adjustments, like we have to add some items, we have to deduct some items. So that is what is there in this particular format which will be used for determining the profit and loss, or gains or profits from business or profession. So this is the format. So it is given here balance as per profit and loss account. This is a amount, and these are the items which should be added, and these are the list of items which should be deducted, so as to get the final amount of profit or gains or losses from business and profession, business or profession. Okay, so expenses which are disallowed but debited to profit and loss account, why it should be added, I will give a numerical illustration of each and every item which are shown here, of each and every item which are shown here. For example, expenses not allowed but debited to profit and loss account, it should be added. Incomes or receipts taxable under this head. So certain incomes and receipts are there which are going to be taxed under the head income from business or profession, but not credited to profit and loss account. So we have to add back. Capital expenses debited to profit and loss account. Capital expenses debited to profit and loss account should be added. Personal expenses debited to profit and loss account should be added. So I told you we are going to speak about this. We are going to give a numerical illustration on this, why it should be added back. Expenses in excess of the allowed amount debited to profit and loss account should be added. Loss is not allowed but debited to profit and loss account. All this undervaluation of closing stock and overvaluation of opening stock should be added. So there is a numerical illustration why it should be added. What is the logical reason why it should be added back to profit to arrive at the correct profit of correct amount of profit. Less items like expenses which are allowed but not debited to profit and loss account should be deducted. Expenses relating to previous year but not debited to profit and loss account should be deducted, or we have to less from the profits. This is the profit. Less losses allowed but not debited to profit and loss account. This item also should be deducted from the profit. So these are the items which we are going to talk about with proper illustration. Incomes or receipts not taxable under this head but credited to profit and loss account should be deducted from profit. So these are the items which should be added, and these are the items which should be deducted. Okay, so let's look all these items, why they should be added, why they should be deducted, and what is the reason we have to deduct, why, what are the reasons why these elements of expenses have to be added. So let's take on individual basis on all the individual items. The first item, the first item is expenses which are expressly disallowed but debited to profit and loss account. So certain expenses are there which are expressly disallowed but which is debited to profit and loss account. So once it's known that is a particular expenditure is disallowed, it's disallowed. So it should not be debited to profit and loss account. And if at all if it is debited to profit and loss account, it's a grave mistake you have committed. So we have to do some adjustments to the old profit, which is the wrong profit. So let's take a small example. So with this example, we'll come to know what should be done. So we have here trading account, opening balance, opening stock, purchases, wages by sales and by closing stock. So the total amount of the credit side is 25 lakhs. This is carried here, and the gross profit is 16 lakhs. Okay. Now this will be carried forward to the profit and loss account. The gross profit is carried forward. There is a balance carried on, brought down. Okay, this is the balance brought down from trading account, which is 16 lakh rupees. Now to office expenses, 3 lakhs. To reserves for bad and doubtful debts and reserve for losses is 1 lakh and 5 lakhs. And if you look, the total of the credit is 16 lakhs. This is kept on the other side. So the balance is 7 lakh rupees. So the net profit is 7 lakh rupees. Now, please remember, there is a element of mistake which is committed in preparing this profit and loss account or trading and profit and loss account. The element of mistake is this one: reserves for losses and reserve for bad and doubtful debts. Please remember, any reserve or provision will not be allowed to be shown on the debit side of profit and loss account, because these are reserves. These are the reserves which are formed from profit. Number one. Number two, these are all just reserves. They are not really expenditure which has taken place. So it should not be debited to profit and loss account. And in this case, it is debited to the profit and loss account. One is the reserve for losses, and the second one being reserve for bad and doubtful debt. So this is disallowed. These two expenses are disallowed. So if I remove these two expenses, for example, I removed these expenses, then what will happen to the profit? Let's look what is going to happen. What is the real profit? So this is the wrong profit, which is 7 lakhs rupees, and let's find out the right profit. So 16 lakhs is carried here, 16 lakhs is carried here, and I have removed this. And because of this, what has happened? Even I removed these two expenses, the profit is now 13 lakh rupees. So from 7 lakhs, it has become 13 lakhs. So what should be done to the whole profit? These two items, 1 lakhs and 5 lakhs, which is not allowed on the debit side of profit and loss account, which is 6 lakhs, should be added. So, let's look at this next slide, which is continued. So that is what I have done. I removed these two expenses. I have to remove these two expenses. So 16 lakhs is the net gross profit, which is total. Carry it on the other side, and now this is the real profit. So 7 lakhs is the wrong profit, and 13 lakhs is the right profit. So how should we convert this 7 lakhs to 13 lakhs? So just add these two items which are not allowed on the debit side of profit and loss account. So this is the answer. This is the wrong profit. This is the right profit. To the 7 lakh rupees, add two items. Sorry, here. Add two items. Add two items, which is a reserves and reserve for losses and reserve for bad and doubtful debts. Okay, there is a mistake here. Reserve This is reserve for bad and reserve for losses. This is not car. This is reserve for losses and reserve for bad and doubtful debts. This item should be added back. So you will get at the right profit, which is 7 lakhs, which wrong profit. Add to that 5 lakhs plus 1 lakh. This is the right profit, which is 13 lakhs. Which is 13 lakhs. So what should you do? The rule is expenses expressly disallowed is not allowed on the debit side of profit and loss account. If it is shown on the debit side of profit and loss account, just what you have to do, add back these items of expenditure which are expressly disallowed to the net profit to arrive at the correct profit. So these two items should be added to the old profit. To this old profit, add 1 lakh and 5 lakhs to arrive at the correct profit. So hope you have understood this particular example. So expenses which are expressly disallowed under the rules of accounting, then it should not be allowed if at all if it is shown on the debit side of profit and loss account. Then just remember to align these expenditures to the old profit to arrive at the original profit. Next one. Next one is look at this. Capital expenses debited to profit and loss account. So capital expenses expenditure should not be in the nature of capital expenditure. Yes, but for natural, it is found that the capital expenditure is shown on the balance sheet closing values, but it is not supposed to be shown the any expenditure in the which is capital in nature or capital expenditure in nature should not be allowed on the debit side of profit and loss account. For example, purchase of a plant or purchase of a factory, purchase of land, purchase of building, purchase of car, purchase of furniture, purchase of computers. These are all capital assets which are acquired. So any expenditure of on these items is called as capital expenditure. And capital expenditure, the rule is uh, only depreciation and relevant revenue expenditures are allowed, not the whole amount of purchase of the capital asset is shown. So if at all if it is shown, what is the thing you have to do to arrive at the correct profits. So let's take a small example. Let's take a small example. So trading account is given opening stock, purchases, wages, and sales and closing stock. And from this particular transaction, we have got that the gross profit is 16 lakh rupees. This gross profit is carried on to the profit and loss account credit side 16 lakh rupees. Now this is 16 lakh rupees. Now carry forward this item to the other side, which is 16 lakh rupees. Now office expenses is 3 lakh, car shown is 1 lakh, building is 5 lakhs, and here the net profit is 7 lakhs. Is it correct? No, this is not correct, because if you look carefully here, car and building are capital expenses in nature. Capital expenses in nature. Please remember only revenue expenses like purchases, wages, salaries, stationery expenditure, wages, uh, factory overheads, depreciation, bad debts, printing and stationery, postage and telegram, commission paid to the sales executive. These are the kind of revenue expenditures which are allowed. But remember, these items are items which are in the nature of capital expenditure. They are shown in the balance sheet and they are depreciated or amortized. So this is not allowed to be shown on the debit side of a profit and loss account, and this can't be shown as an expenditure. So there is an element of error or mistake which is committed or taken place, which may be deliberate or unintentional. So there is a error in the calculation of the net profit. So it is bounded duty to find out the correct net profit, because on this correct net profit we have to pay the appropriate tax. So if I remove these two elements as expenditure because they are not allowed, what will happen? The expenditure are removed, so the profit is likely is bound to change. So 16 lakhs here, carry forward the 16 lakhs to this right the left side of the profit and loss account total. And now if you see, this amount is not 7 lakh rupees, this amount becomes 13 lakh rupees. So the original wrong profit was 7 lakh rupees, and the right profit after calculation has become 13 lakh rupees. So this is the one which is the correct profit. So we have to change this profit to this profit. So what should I do? Add these two items of expenditures, which are capital expenditure in nature, to the profit and loss account, to the net profit, sorry. So if I add 1 lakh, which is core expenditure, and 5 lakhs of building expenditure, this is total 6 lakhs. If I am adding to 7 lakh rupees, my real profit will be 13 lakh rupees in place of 7 lakh rupees, because I have added back 6 lakh rupees. So in the next slide, I am showing that these calculations. So please pay attention. So here, what I did, I removed those. This is the right trading and profit and loss account. I removed these two expenditures of car and the other one being building. I removed that, and I came to know that net profit is not 7 lakh rupees as shown earlier, but 13 lakh rupees. So it's not fair to calculate every time like this. It's a time consuming process. So instead of that one, what you have to do, to the old profit of 7 lakh rupees, add these two items of 1 lakh and 6 lakhs. 1 lakh and 6 lakhs, that's it. So what is the essence? The summary of our discussion is put in the next slide. You can have a glance on it. So the wrong profit was 7 lakh rupees. The right profit is 13 lakh rupees. To the wrong profit, which is 7 lakh rupees, add capital expenditures which are not allowed. Which are not allowed. So please remember, these are not allowed, as I already discussed. What you have to do? Add. So 1 lakh and 5 lakhs. If you add, the correct profit is 13 lakh rupees. So you get the right profit as 13 lakh rupees. So what is the rule? Capital expenditure is not allowed on the debit side of profit and loss account, which I have just now discussed. If it is shown on the debit side of profit and loss account, then what you have to do, to the old profit, which is 7 lakh rupees, add back these items, add to the net profit these two items to arrive at the correct profit. So add back to this wrong profit these two items of capital expenditure to arrive at the right profit, which is 13 lakh rupees. So hope you have understood this particular problem. So why we have to add? So this is a second additional addition which has taken place to the wrong profit. One is expenses which are disallowed, and the second being expenses which are capital in nature. Now let's look at the third item, to which we have to do some manipulations. Expenditure should not be in the nature of personal expenditure. So when you are doing business, please remember, on the profit and loss account or in the trading account, you can't show your personal expenditure or household expenditure, because business is different, and domestic expenses are different. They are not connected. This personal expenditure is not connected to business. So how can you show them as an expenditure, and debiting to the profit and loss account is not allowed. So what should you do? Any expenditure which is personal expenditure in nature has to be manipulated to arrive at the correct profit. So will look what should we do, whether we have to add or what kind of adjustments to be done as far as this personal expenditure is concerned to the profit. Well, let's take a small example. Let's take a small example to understand this. So opening stock, purchases, wages, sales, and closing stocks is given to you. And from this trading account, we came to know that gross profit is 16 lakhs. The gross profit is 16 lakhs. Now carry forward or brought down net profit, gross profit is 16 lakhs. The total is 16 lakhs. Now carry forward to the other side, 16 lakh rupees. So office expenses are 3 lakhs. House maid, servant, or housemaid or servant salary is 1 lakh. And to son's school fees is 5 lakhs. And the resultant net profit from this uh, particular profit and loss account is 7 lakh rupees. So as it is clearly appearing, this item, which is household expenditure, maid servant salary, and school's fees, son's school fees is 5 lakhs, is not the expenditure which is which is pertaining to business. So these two items of expenditure will not be shown on the debit side of profit and loss account. It is disallowed expenditure or personal expenditure, and personal expenditure will not be shown on the debit side of profit and loss account. So there is a error, there is a mistake, intentionally or unintentionally, deliberately or otherwise, and because of this, profit is wrong profit which we have calculated. So what should I do to arrive at this one? We have to remove these two items. If I remove these two items, what will happen? 16 lakhs will come over this place. And when I remove these two, only expenditure is 3 lakh rupees. And this will not be 7 lakh rupees. It will become 13 lakh rupees. Now, the old profit was 7 lakh rupees. The new profit or the real profit or the correct profit is 13 lakh rupees. So what is to be done now? To the 7 lakh rupees, add back this 6 lakhs, 5 lakhs and 1 lakh, which is personal expenditure in nature. Then you will arrive at the real correct profit, which is 13 lakh rupees. So in the next slide, I was shown the real correct profit. So gross profit is 25 lakhs. Sorry, just a moment. There is an element of mistake. Okay. So the gross profit is 16 lakhs, correct? This is 16 lakhs. Gross profit is 16 lakhs. This is 16 lakhs. Carry forward is, so these two expenditures, which is personal in nature, were school fees of the son and maid servant salary were removed. And then I came to know this, that the profit is not 7 lakh rupees as shown earlier, which was a mistake. The profit is 13 lakh rupees. When I removed this, what has happened to the profit? The profit has increased. So we have to increase this profit by 6 lakh rupees. How do we do it? By adding the personal expenditure of 1 lakh and 5 lakhs. If I add this 6 lakh rupees to the wrong profit, then I will arrive at the real, correct, and accurate profit. So the summary is put in this slide. Wrong profit was 7 lakh rupees. The correct profit is 13 lakh rupees. To the wrong profit of 7 lakh rupees, to arrive at the right profit, what should I do? I should add this 1 lakh rupees of personal expenditure of housemaid servant salary and school fees of the children, which is not allowed, to add back to be added back to the profit. So 7 to the 7 lakhs, I will add this 1 lakh rupees and this 5 lakh rupees to arrive at this 13 lakh rupees of right profit. So rule, what is the rule? Personal expenditure is not allowed on the debit side of profit and loss account. Number one. Yes. If it is shown on the debit side of profit and loss account, then there is a element of mistake. To overcome that, what you have to do? You have to add to the old profit these two expenditures to arrive at the correct profit. If it is shown on the debit side of profit and loss account, then we have to add to the old profit these two items to arrive at the correct profit. So capital expenditure, personal expenditure are the expense which are not allowed to be shown on the debit side of profit and loss account should be added back to profit. Hope you have understood it. Next one. The next one is incomes or receipts taxable under this head but not credited to profit and loss account. So there may be some incomes or receipts which are taxed under the head profits or gains from business or profession, but you are not credited to profit and loss account. So there is an element of error or mistake which has been committed, and whatever the resultant profit is there, that there is a wrong calculation of profit. So you have to rectify the profit. So let's take a small example. Let's take a small example. So the trading and account is given, the profit and loss account is given, and from this we will find out what is the error which has been committed. Okay, commission related to business. Okay, now I will just take a small adjustment. Commission related to business 5 lakh rupees. Now let's talk about the example. So opening stock is 3 lakh rupees, purchase is 5 lakh rupees, wages is 1 lakh rupees, sales is 20 lakh rupees, and closing stock is 5 lakh rupees. The total is 25 lakh rupees. Carry forward to the other side, and this is the gross profit. So here the gross profit is taken here. Just forget about this item for the time being. Now this is the for 16 lakh rupees carry forward to the other side. This is genuine business expenditure. This is genuine business expenditure. SDOH. Please remember the full form of SDOH is selling and distribution overheads is 5 lakh rupees. So these are all real expenditures which are allowed on the debit side of profit and loss account. So as far as this appears on the face of it, it is correct. So the net profit is 7 lakh rupees. But there is an income, there is a receipt, and the name of the receipt or the nature of the receipt is commission related to business, which is 5 lakh rupees. He has forgotten to show this income. Please remember, one particular transaction has been eliminated or not recorded, and the transaction is income in nature. So, what is going to happen? The profit is going to be deflated. So, this commission, which is related to business, once you are doing engaged in business, there may be an income in the form of commission from business transaction. So in this case, there was a income of 5 lakh rupees from commission, and it was not shown as an income on the credit side of profit and loss account. So incomes should be shown on the credit side of profit and loss account here. So because of this, what has happened? Income has decreased, and profit also will naturally decrease. So you have shown 7 lakhs of income only or net profit only, but you have not regarded this particular transaction. You have not taken into account this particular transaction on the credit side of profit and loss. If at all, if you take this one, if you are required to take this one, and if you take this one on the credit side of profit and loss account, let's see what is going to happen to this net profit of 7 lakh rupees. So so now in this particular statement of profit and loss account, I have added or credited this amount of commission related to business on the credit side of profit and loss account. So what has happened? The total was previously 16 lakhs on the credit side of profit and loss account. Now it has become 21 lakh. 21 lakh. So carry this to the other side. And now what has happened because of this? If you do the calculations, the net profit has become 12 lakh rupees. Previously, that net profit was 7 lakh rupees. If you remember, look here, 7 lakh rupees. Now the profit is not 7 lakh rupees. It has changed to 12 lakh rupees. Means there is an increase of 5 lakh rupees. So what is this increase? This one. What is this? Income by means of commission related to business. So to this old profit, this income which is related to business income not credited on profit and loss account should be added back to arrive at the right profit. So to this old profit of 7 lakhs, add an income of 5 lakh rupees which was not credited to profit and loss account to arrive at the real profit of 12 lakh rupees. So in the next slide, this is shown to you. Look and note it. So wrong profit was 7 lakh rupees, right profit was 12 lakh rupees. So to the wrong profit, add 5 lakh rupees, which should be credited to the which so was supposed to be credited to profit and loss account, but you have not shown it as income, not credited. So you will get 12 lakh rupees. So what is the rule? Incomes to be credited to profit and loss account. If it is not credited, then you have to add back on the which is not credited on the credit side of profit and loss account should be added to the old profit. To this, we are adding this to this old profit. We have to add this to arrive at the correct profit of this figure. So hope you have understood. So we have understood the logical reason why we have to add some expenses or incomes till so far. So there can be some minus items also, some items which have to be deducted from net profit. So this particular session has been devoted to understanding the format which I have shown earlier at the beginning of the session. Next one, expenses in excess of allowed amount debited to profit and loss account. Expenses in excess of allowed amount debited to profit and loss account. Let's understand it. Here now, let's take a small example. So the same discussion, the same trading account, 3 lakhs of opening stock, purchases of 5 lakhs, wages of 1 lakh, and by sales of 20 lakhs. So from this and the closing stock is 5 lakhs, the total is 25 lakhs. The total is carried on the debit side of profit and loss account, and the gross profit is 16 lakhs from trading account. Gross profit is carried or balance brought down, gross profit is 16 lakh rupees, the total is 16 lakh rupees. Now, office expenses are 3 lakh, salaries allowed is 1 lakh, selling and distribution overheads are 7 lakh. So the eventual net profit is 16 lakh rupees. So 16 lakh rupees. So 16 lakh rupees. Yes. A small mistake is there. Okay, don't mind. Just a moment. Yeah, 7 plus 5, 12, 12 plus 1, 12 plus 1. Yes, correct. 3 plus 1, 4, 4 plus 4 plus 7. Okay, the net profit is 7 lakhs, 5 lakh rupees. Sorry, this is the net profit. But if you look at the note, selling and distribution allowed, overheads allowed is only rupees 5 lakhs. So in this case, an expenditure is shown in excess than what it should have been. That is the expenses in excess of the allowed amount. Means you are allowed to show less expenditure, but you have shown more expenditure. So in this case, how much more you have shown? 2 lakh rupees more expenditure you have shown. So the profit is decreasing by 2 lakhs. So now let's, and I will just again I will explain this particular situation so that there is no element, there is a hardly any element of confusion or doubt. I will try to remove your doubts. Now in this case, if you look this particular transaction compared with this transaction, how much was allowed according to the books of accounts or summary of the statement? You are allowed to show on the debit side of profit and loss account selling and distribution orders of 5 lakh rupees. But how much you have shown? 7 lakh rupees. Means you have shown expenditure of more than 2 lakh rupees than what it should have been. There should have been only 5 lakh rupees here, but you have shown 7 lakh rupees. So there is an error in the calculation as far as net profit is concerned. So what should I do? I have to change this one to 5 lakh rupees. So automatically what will happen? If you calculate, the profit will increase to 7 lakh rupees. So the adjustment what you do is you have to add to this old profit 2 lakh rupees to arrive at the right profit. And this 2 lakh rupees is expenses allowed, expenses in excess than what it is allowed. Okay, so if I put it in a proper manner, this profit and loss account, it appears like this. It appears like this. So previously it was 5 lakh rupees. If you see here, it was 5 lakh rupees. Now once I am correcting the profit and loss account, the profit has changed to 5 lakh to 7 lakhs. And previously I have shown here selling and distribution overheads on the debit side of profit and loss account of 7 lakhs, but it should have been only 5 lakh rupees. So because of this change, what has happened? The profit has increased to 5 lakhs, from 5 lakhs to 7 lakhs by 2 lakh rupees, by 2 lakh rupees. So we have to add to the old profit this expenditure which is excess than what is allowed, to arrive at the right profit. So the summary, let's look at the summary. Let's look at the summary. The summary is the wrong profit is 5 lakh rupees. That you just ignore the heading. Correct profit is 7 lakh rupees. So to the wrong profit, you have to add the excess expenditure claimed and which was not allowed to be shown on the debit side of profit and loss account. So if you add this one, you will get the right figure, which is 7 lakh rupees. Hope you have understood. So what is the rule? Excess of selling and distribution orders debited to profit and loss account, which is not allowed. If it is shown on the debit side of profit and loss account, that excess with including that excess amount, it should be added back to the old profit to arrive at the right profit or the correct or accurate profit. Hope you have understood it. Next item, expenses not relating to the previous year but debited to profit and loss account. If some expenditures are of past years, so past years, previous years means past years, then these expenditures are to be shown on those years, not in this current year or in this previous year. So expenses not relating to the previous year. Previous year means our current year. Please remember, don't get confused. In previous year means financial year. So if any expenditure is not related to the financial year or previous year, and which is related to past years or in future years, and future you can't say that this is the expenditure. So it is naturally it will be of past years. So past year's expenditure will be allowed to be shown as an expenditure in the past year only, not in the current year or in the financial year or in the previous year. If it is shown, let's look what should be done to arrive at the right profit. Okay, let's take a small example. So this is of expenses not relating to the not relating to the current year, but they are related to the past years. So let's take a small example. The opening stock is 3 lakh rupees, purchases are 5 lakhs, wages is 1 lakh, sales is 20 lakhs, and closing stock is 5 lakh rupees. The total on the credit side is 25 lakh rupees. Carry this to the other side, and you will get a gross profit of 16 lakhs. Brought down gross profit to trading account, profit and loss account from trading account is 16 lakhs. So 16 lakhs here. The 16 lakhs is carried on the other side. Okay. Office expenses are allowed, salaries are allowed, selling and distribution expenses are allowed. So this total expenditure is 11 lakhs. So 16 lakhs minus 11 lakhs, you will get 5 lakhs. Now look at the adjustment. The adjustment is stating that selling and distribution expenses, selling and distribution overheads are expenses pertaining to the previous year, which is not allowed for the current year. This is of the past year to the extent of 3 lakh rupees. Some expenses of selling and distribution overheads are of the past year and not the current year. And how much it is? 3 lakh rupees. For example, this is the profit and loss account of 2019 and 20. And in the profit and loss account of 19 and 20, an expenditure of 16 and 17 is shown. Is it fair? No. So in this case, with this example, it is stated here that 3 lakh rupees of the past year expenditure is shown in this current year, as far as SDOH is concerned, selling and distribution overheads is concerned. So there is a mistake which has been committed. There is a mistake or error or which is committed in this particular preparation of profit and loss account. So here it should have been how much? It should have been only 3 lakh rupees. Sorry, so 4 lakh rupees, because 3 lakhs out of 7 lakhs is of the past year, not of the current year. So if I remove, what will happen? The expenditure will decrease to the tune of 3 lakh rupees. So if I place here 4 lakh rupees, for example, 4 plus 1 is 5, 5 plus 3 is 8, 8, 16 minus 8 is 8 lakhs. So this is wrong and this will become 8 lakhs. So 5 lakh rupees was the old profit and the new profit is 8 lakh rupees. Now what is the inference? We have to add 3 lakh rupees, which is the expenditure of the previous year or the past year. So this is what I have done. So previously it was shown here 7 lakh rupees. Now I have rectified it. This is wrong in the, so I have rectified it and it has shown as 4 lakh rupees. And because of this, previously it was the profit was 5 lakh rupees. By removing this expenditure to the extent of 3 lakh rupees, the net profit has become 8 lakh rupees. So this is the way we have to do the adjustment in case of those items where the expenditure is of the past years and not the current year. So what needs to be done? Summary is there. Wrong profit was 5 lakh rupees. The right profit is 8 lakh rupees. To the old profit or the wrong profit, add back the expenses of the previous past years, which are not allowed to be shown on the credit side of debit side of profit and loss account. If we add this 3 lakhs to 5 lakhs, you will get 8 lakh rupees. So rule is that any expenditure of the previous year pertaining to previous years or the past year should not be shown in the current year. And if at all if it is shown, then add back to the wrong profit to arrive at the right profit. So hope you have understood till this particular point. Very, very important discussion. Expenses expressly allowed but not credited to profit and loss account. So some expenses are allowed as expenditure because these are genuine business expenditure which have taken place for the business purpose, but not debited to profit and loss account. Maybe there is an element of overlook or they have ignored this particular item. So what should I do if an element of expenditure should be shown on the debit side of profit and loss account, but forgotten to recognize that expenditure? Let's take a small example. In this case, the profit and loss account trading account is given. So the gross profit is 16 lakh rupees. The other things are constant. Not change the figures. So the net gross profit carried on brought forward is 16 lakh rupees. On the debit side, it is carry forward 16 lakh rupees, and office expenses are allowed, salaries are allowed, depreciation is allowed. So if I allow an expenditure 11 lakh rupees out of a gross profit of 16 lakh rupees, 16 minus 11 is equal to 5 lakh rupees. Okay, so it is correct. But look at the note or additional information. Depreciation which is allowed for the current year is 10 lakh rupees. So in this case, the depreciation is 7 lakh rupees. But how much he has shown? He has shown only 10 lakh rupees. So this is an element of you have not recognized an depreciation of 3 lakh rupees. You have not recognized as an expenditure this element of expenditure of depreciation to the tune of 3 lakh rupees. So what should you do? You should add this 3 lakh rupees to the depreciation. So if you add this 3 lakh rupees to the depreciation becomes 10 lakh rupees. So if I show 10 lakh rupees in place of 7 lakh rupees depreciation, 10 plus 1, 11, 11 plus 3 is equal to 14. So out of 16 gross profit, I remove 14, I will get 2 lakhs as net profit. So this is the wrong profit, this is the right profit. So what should be done? To this old profit of 5 lakh rupees, decrease this 3 lakh rupees, which is the real expenditure, but you have forgotten to show it. So deduct it. So what I have done in the next slide, I have in place of 7 lakh rupees, I have changed it to 10 lakh rupees. And what is happening to 5 lakhs? Just observe. So depreciation, I changed it to 10 lakh rupees from 3 lakh rupees. So from 7 lakhs to I have added 3 lakhs. So the depreciation is now 10 lakh rupees. And what has happened to net profit? Net profit has decreased from 5 lakhs to 2 lakhs. So what should be done is the point here. Now to this uh, to this 5 lakh rupees the wrong profit, deduct this 3 lakh rupees which is the expenditure which is allowed to be shown on the debit side of profit and loss account, but it is not shown. So by doing so, what has happened? The profit has decreased because you have forgotten to show one expenditure, and one expenditure if you don't show, the profit is going to increase, and if it increases then you have to decrease it. That is what is a natural phenomenon. So in the next slide, the summary is given. The wrong profit is 5 lakh rupees. The right profit is 2 lakh rupees. To the wrong profit of 5 lakh rupees, now look here. In the previous cases, it was add was the symbol. Now in this case, we have to depreciate, less it or deduct it, as we have to show 10 lakhs expenditure, but we have shown only 3 lakhs. So deduct it, this 3 lakh rupees to arrive at 2 lakh rupees. Now what is the concluding point? What is the inference? Rule: expenses expressly allowed to be shown on the debit side of profit and loss account, but not debited to profit and loss account are not shown as an expenditure, should be deducted from the old profit to arrive at the original profit or the right profit. So you have to deduct this 3 lakh rupees toward the right profit, and from this you have to deduct it. So hope you have understood this particular point. Next one. Next one is expenses relating to the previous year, current financial year, but not credited to profit and loss account. So some expenses are of the previous year only, of the current year only, but you are not debited to profit and loss account. So it is a grave mistake, and if it is committed, then we have to rectify it. Let's so look at how to rectify, how to do the rectification is concerned. So The same figures, the same trading account. The so the gross profit is 16 lakh rupees. 16 lakh rupees. This on the other side 16 lakh rupees. Office expenses 3 lakhs. Salaries 1 lakh, and eventually the net profit is 12 lakhs. So 4 lakhs is the expenditure deducted from 16 lakhs. You will get a net profit of 12 lakhs. But what is the mistake you have committed is shown in the note or additional information. Depreciation expenses pertaining to the current year, that is the this particular current year or previous year. Previous year means in the taxation, in direct tax it is the current year, is 18 lakh rupees, sorry 8 lakh rupees. Depreciation is to be shown on the credit side of debit side of profit and loss account to the tune of 8 lakh rupees, but there is no mention of depreciation in this particular profit and loss account debit side. So there is an element of mistake which has been committed. So because of this, eventually the profit what has been calculated is wrong. There is an element of error. There is a mistake, and this is a grave mistake. So what should be done? We have to add here 8 lakh rupees. Sorry, 8 lakh rupees as depreciation. So if I add one more expenditure, what will happen? When the expenditure increases, the profit decreases. So what will happen to the profit? See, 3 plus 1, 4. 4 plus 8, 12. 16 lakhs minus 12 lakhs is 4 lakhs. So the old profit was 12 lakh rupees. Now the new profit is 4 lakh rupees. So what should be done? We have to deduct to this old profit 12 lakhs. We have to deduct 8 lakhs. To this old profit of 12 lakhs, we have to deduct 8 lakh rupees to arrive at 4 lakh rupees. So please remember the rule. Now in the next slide, I have included the depreciation and how the net profit is changing from 12 lakhs. Look, so net profit was previously 12 lakhs. It has changed to 4 lakhs by adding the expenditure which was not shown previously. Now it is been shown. So this is the way you have to correct it. But every time you can't open a new profit and loss account and start calculating it. So the summary is very important. The summary states that wrong profit is 12 lakh rupees. The right profit is 4 lakh rupees. To this wrong profit of 12 lakh rupees, add the depreciation or the expenses which are allowed to be shown on the debit side of profit and loss account. Less, and you will get the right profit. So what is the summary? Summary is expenses pertaining to the previous year or current year but not debited to profit and loss account should be deducted from the old profit to arrive at the right profit. So deduction. Next one. Losses allowed but not debited to profit and loss account. Certain losses are to be shown on the debit side of profit and loss account but not debited to profit and loss account. So what should I do? So let's take a small example. Let's take a small example and do will do what will do what to how the rectification can be done. Okay, the same profit and trading account. Gross profit is 16 lakhs. So 16 lakhs. So 16 lakhs here, and office expenses is allowed. Salaries are allowed, and because of this, the net profit is 12 lakh. Now this accountant or the concerned person doesn't know that there are some expense losses which should be shown on this side, that is debit side of profit and loss account. But in this case, it is given in note that this guy has not taken into account a loss. And what is the loss? The loss is lost to the furniture due to fire, not debited to the profit and loss account, and the amount is some 4 lakh rupees. So there is a some loss which has incurred to furniture, and was a fire, and the loss to the furniture was 4 lakh rupees. So certainly this loss should be shown on the debit side of profit and loss account as a business loss. Whenever there is a business, there is an element of loss. For example, loss due to embezzlement. For example, cashier is there and he has embezzled, or there is a theft which has taken place to the tune of some 1 lakh rupees. So in banking, it normally happens that there is a scope for embezzlement. So these are some losses which are genuine losses, it can't be avoided. So it should be shown on the debit side of profit and loss account. But this guy has forgotten to show this 4 lakh rupees as a loss. If at all, if it is permitted to be shown, then it should be shown. Okay. So what will happen if I show this loss of 4 lakh rupees to the furniture here? So the profit will be now will be reduced to 8 lakh rupees. The net profit will be 8 lakh rupees. Now, what is to be done? To this 12 lakh rupees, 4 lakhs has to be deducted, which is a loss which is allowed to be shown on the debit side of profit and loss account, but it is not shown previously. So, when I am rectifying what has happened, look, when I am rectifying and showing this loss, the profit originally was 12 lakh rupees has reduced to 8 lakh rupees by 4 lakh rupees, that loss. Okay, hope you understood. Now the summary. The summary is previously the wrong profit was 12 lakh rupees. The right profit is 8 lakh rupees. To this 12 lakh rupees, reduce the loss which has incurred and not shown on the debit side of profit and loss account, and you will get at the right profit. So, what is the summary? Any loss permitted to be shown on the debit side of profit and loss account should be shown on the debit side of profit and loss account. If it is not shown on the debit side of profit and loss account, it should be deducted from the profit at the to arrive at the right profit. Next one. So hope you understood till so far. Incomes or receipts is the next item. Incomes or receipts not taxable under this head, but created to profit and loss. So if there are some incomes which are not pertaining to profits and gains of business and profession, it should not be created. It is not an income of under this head of profits and gains from business or profession. And if at all, if it is shown on the credit side of profit and loss account, then the profit is increasing and you have to reduce that much of profit. Let's take a small example and a numerical illustration. Let's take a small example. So this is the example. The net profit, gross profit is 16 lakh rupees. So by receipt on sale of building, by receipt on sale of building. Sorry, so small mistake. I will apologize. Just a moment. Incomes or receipts not okay. Now here let's take a small example with the given example. Here, if at all, if I am showing by rent from house property of some 2 lakh rupees and by dividend income, by dividend income of 2 lakh rupees. So the total of the credit side of profit and loss account will become 20 lakh rupees. I'm just rectifying them. 20 lakh rupees. Okay. So carry forward these 20 lakhs to the other side. And because of this, what has happened? This will become 16 lakh rupees. Okay. 16 lakh rupees. So this is the real data. So what I have done, gross profit is 16 lakh rupees. The income which is shown on the credit side of profit and loss account is by rent from house property of 2 lakh rupees and by dividend income of 2 lakh rupees. And total is 20 lakh rupees. And I'm carrying forward, carrying on the other side this 20 lakh rupees. So office expenditure is 3 lakhs and salary is 1 lakh. So there is a grave mistake which has taken place. Let's understand the net profit. The net profit is 16 lakh rupees. Now please remember this item, rent from house property, should be shown under the income from house property, and this dividend income is an income from other source. So this should not be shown on the profit and loss account credit side. So by showing what has happened, the income is increased. So the net profit also has increased. So we have to deduct that much of net profit. So if I remove this one, what will happen? See, 16 lakh rupees, 16 lakh rupees is carried forward here, and the net profit is 12 lakh rupees. So previously it was 16 lakh rupees. Now it is only 12 lakh rupees. So that's 2 lakh rupees of 4 lakh rupees of incomes which should not be shown on the credit side of profit and loss account, which you shown should be reduced to arrive at the right profit. Right profit. Hope you have understood this particular point. Next one. Next one is capital receipt credited to profit and loss account. So if there is a capital receipt and if this capital receipt is shown on the credit side of profit and loss account, maybe there is element of mistake and the income is inflated, the profit is inflated, and more profit is shown in place of the original profits. Let's take a small example. So in this case, the gross profit is 16 lakh rupees. The receipts on sale of building are shown on the credit side of profit and loss account, 20 lakh rupees. So the total of credit side of profit and loss account is 36 lakhs rupees, and it's carried on the other side 36 lakh rupees. And there are two expenses to the tune of 4 lakh rupees. If I reduce 36 lakhs and 4 lakhs of expenditure from these 36 lakhs, the net profit is 32 lakhs. But there is a mistake which has been committed again. This is a capital receipt. Just like capital expenditure, capital expenditure should not be shown on the debit side of profit and loss account. Capital receipt also should not be shown on the income side of profit and loss account or credit side of profit and loss account. So this is the mistake I have done, because this will come under the topic capital gains. So there it will be shown, not in business profit. So if I remove this 20 lakh rupees, what will happen? This will become 16 lakh rupees. And if I take 16 lakh rupees on the other side, 16 lakh rupees, remove this one because it is changing now, it will become 12 lakhs. So the previous profit was 32 lakh rupees, and now the real profit is 12 lakh rupees. So how did it happen? I have to reduce 20 lakh rupees from 30 lakh rupees, which is the capital receipt. So any capital receipt should be deducted from net profit. Now, when I'm removing this one, let's see how it appears as far as profit and loss account is concerned. So in this case, I have reduced it. I have removed it. So the profit originally was 32 lakh rupees. Now it is becoming only 12 lakh rupees once I have removed that 20 lakh rupees. So this is the summary. Wrong profit was 32 lakh rupees. Right profit was 12 lakh rupees. To the wrong profit of 12 lakh rupees, remove the capital receipts which are not to be shown on the credit side of profit and loss account. So after you remove from this 32 lakh rupees, 20 lakh rupees, the right profit will be 12 lakh rupees. So the summary is capital receipt should not be shown on the credit side of profit and loss account, and if it is credited, then it should be deducted from profit. This capital receipt should be shown under the head capital gains. So hope you have understood up to this stage. Incomes or receipts taxable under other head, but profit credited to profit and loss account. So already we have discussed this. So again, I'm going to just put some few minutes on this discussion. So here gross profit is 16 lakh rupees. Income from house property is 20 lakhs. Income from winnings from lotteries is 12 lakhs. So 16 plus 20 plus 12 is 48 lakhs. So net profit is 44 lakhs. So what is the mistake we have done? Income from house property and winnings from lotteries. Income from house property is not an income from business or profession, and income from lotteries also is not income from or incomes or gains or profits from business or profession. So this has no place on the credit side of profit and loss account. So you have to remove this. So if we remove this, what will happen? This will become 16 lakh rupees on the credit side of profit and loss account. So this is not 48 lakh, this will become 16 lakh rupees. So the net profit will become 12 lakh rupees. The net profit will become 12 lakh rupees. So previously the net profit was 44 lakh rupees. Now the net profit is 12 lakh rupees. So I have to reduce how much? Third, just a moment. To 44 minus 32. So you have to reduce 32 lakhs. Now what is this 32 lakhs? These two items. One is income from house property and one is income from lotteries or winning from lotteries. So you have to deduct from the profit income which are not pertinent incomes under the income from business or profession, but they are from other sources of income. So now this is the slide where the real profit and loss account is shown. So I will remove these two items on the credit side of profit and loss account, and then the net profit has become 12 lakh rupees. So originally it was 44 lakh rupees. Now it is only 12 lakh rupees. So 44 was a wrong profit. The right profit is 12 lakh rupees. So to this uh, old profit of 44 lakh rupees, deduct these two incomes which are not incomes of the incomes from business or profession. So you have to reduce this one. That is I have deduct and you will get the right profit. So incomes or receipts not taxable under this head, but credited to profit and loss account. Then if it is credited, then it should be deducted from profit to arrive at the correct profit. So hope you have understood. And any element of ambiguity is there, you can let me know, and I will help you out. But at the same time, I will take up some more elements of expenses which are where manipulations are taking place. So another set of expenses. Okay, we'll continue with the format. In that format, I have shown. I even discussed about overvaluation of opening stock, overvaluation of closing stock, overvaluation of so on and so forth. So overvaluation of opening stock, overvaluation of closing stock, undervaluation of opening stock, and undervaluation of closing stock. So these four items can be affecting the profit of the concerned business. So we have to rectify them. So another discussion on these four items will take place now. So put your attention and listen to me carefully. So first one is overvaluation of opening stock. So if you're overvaluing the opening stock, overvaluing the opening stock. So there can be an error. There can be error in the calculation of the profit, and the profit will not be a right profit which is shown. So, for example, let's take what should be done as far as overvaluation is concerned. So, to the opening stock, so the trading account is given. The trading account is given. So, trading account shows opening stock of 3 lakh rupees, purchases of 5 lakh rupees, purchases of 5 lakh rupees, purchases of 5 lakh rupees, and I think this is the time to close here, and I will continue from this particular session in the next class. Thank you so much for my patience listening. Bye, take care.